History suggests the next 2 weeks are absolutely critical for Tesla stock. Here in this video, I will share with you all of your major news today, option activity, what the shorts are doing, why the next 2 weeks are critical, and much more. Gary Black writes on X, many in the media are starting to recognize the shortfall in Tesla Q1 deliveries is due in large part to buyers delaying taking delivery of Model Ys until the refreshed version is available. The naive media keeps blaming the Q1 delivery shortfall on Elon's political comments and Doge spending cutbacks. While Dems may be increasingly against buying Teslas, Republicans are likely thrilled with Elon's comments and Doge efforts. And this is something I have talked about before here on this channel. I actually think Elon's political affiliations long term will turn out to be a positive for Tesla. Why? Because I personally know, like, diehard Trump supporters, like, Trump can do no wrong. And, you know, I've talked to them about EVs for a long time. They were always against them. And a lot of them didn't like Elon. Like, the people I know, at least, did not like Elon. Now they love him, okay? For better or for worse, they have opened up to EVs. It's kind of like, you know, Tesla, let's say 50% of the market, call that the, you know, Trump supporters, really were never in the market to purchase a Tesla anyways. That market is now potentially opened up just because of political affiliation. Now, yes, you're going to ostracize some people on the left, but the net is probably positive for Tesla, and it could be really positive for Tesla. Longer, more medium term. You're not going to see that right away. People don't just rush out and buy new vehicles, but longer term, I do think this will end up being a positive for Tesla. Now, Heisenberg on X writes, Tesla will end today on a 7-week losing streak, the first in its history. The 6 other large drawdowns dating back to 2020 have amounted to an average loss of 52%. The current drawdown is right there at 50%. So just based on historic numbers, the drawdown is getting long on the tooth. Is it time for a bounce? Next week will be critical. So again, like during 2022, for an example, you ended up falling like 75% in Tesla stock. Okay. But there was many bounces in that process. You haven't gotten a bounce yet. Even during the first sell-off in 2022, you fell 44%, you bounced up, you fell 46%, you bounced up, then you sold off 68%, and that was also when Elon was buying, you know, Twitter. Okay, so a little bit different here. This is the longest losing streak for Tesla since 2020, which is kind of crazy. Roland Percher writes on X, what the media says about Tesla sales compared to what I see. And if you look at this chart here, this is looking at Q1 in the first, segment of Q1. This purple line here is 2025 in Q1. Compare that to the green line here for 2024. Yeah, sure. There is a difference, right? You're down 45%, but you will see a boost in deliveries like you normally do towards the end of the quarter. I think the question really is, how much of a boost do we get from the new Model Y? And I think there's a lot of pent-up demand out there, as Cathie Wood recently said, that in fact a lot of Tesla employees, when you go to a showroom to buy a Model Y in recent weeks, have told customers just to wait for the new Model Y, which is the right thing to do for people. If people don't know the new Model Y is coming and it's like 2-3 weeks later, you can get a brand new version of the Model Y, likely higher margins. Hopefully that's the idea. And you can get it for roughly the same price, a little bit more, of course, but roughly similar. That is a good thing for your customers. Okay. And I think, obviously, I don't know this definitively, but the rest of this quarter should be good. The fear, if you will, around Tesla deliveries is bottoming right now. And that should be good for Tesla stock, as Tesla does tend to follow kind of the overall fundamentals of what's going on in the business. Yes, it's momentum. Sometimes, we don't care about fundamentals, but when there's fear about deliveries and slowdown there, it affects the stock. When those fears subside and deliveries get better again, the stock does well. And considering you're in this historical drawdown for Tesla, this could be marking a bottom or a low point for Tesla in the short term. Now, I don't know if that's the ultimate bottom. I have been buying Tesla on the way down, couple shares here, couple shares there, 2, 3, 5 shares every other day or so. I think that's a good way to get into more of a Tesla position today, right? You don't have to do it all at once. In the short term, could you bounce? Yes. Longer term, I'm concerned about the economy. I can't lie to you guys. And in the short term, if we do get a, sigh of relief, if you will, you could easily make it back to your 200-day moving average around $281. Potentially even that 310 level is where I would be targeting. Now, the 325 level is getting kind of up there, but, could you hit that as well? That's 23.5%. Probably. I wouldn't be super shocked. And just wait until you start to get really good weekly delivery numbers coming out of China and Europe. Everyone's going to all of a sudden realize they overreacted to the delivery numbers for, Europe, which in all reality, it's crazy because Europe in 2024 in January delivered 18,000 vehicles. In this January, Tesla delivered 9,000 vehicles. So only a 9,000 vehicle difference year over year, January to January, caused all of this fear. And it's logical. The new Model Y is coming. There's virtually no sales of the Model Y yet. They're just starting again. I would actually say 9,000 deliveries in Europe in January was a very good number, considering nobody's buying a Model Y right now. And again, they're not buying a Model Y because the new Model Y is coming out and they are waiting for it. Not that they are all of a sudden against Tesla or something like that. That's kind of what the bears are trying to project when that's not the reality. That's why, during moments like this, I think it's so important to take a look at what big money is doing. You even seen on Friday, Tesla was very, very volatile. It was positive for a couple moments. It was negative. At some points, it was really negative. But you had 912,000 shares that were covered by hedge funds and institutions. The short interest in Tesla is sitting at the lowest you have ever seen in Tesla's history. That's not a bearish sign. That is a very bullish sign following Tesla stock falling this much. Short sellers have been covering as Tesla has been falling. That is a positive sign for the bulls. Activity in Tesla stock on Friday was not nearly as good as what you are used to seeing. But again, when there's this much volatility, you don't want to look at a day or two and draw conclusions. You had 791 different trades totaling $1.36 billion with a positive order value of 34%. Over the past week, you had 3,150 different trades totaling $10.82 billion with a positive order value of 49%. So over the past week, option activity was virtually neutral. Now take a listen to what Cathie Wood just said about Tesla. I did go ahead and speed this up a little bit so you shorten a 3-4 minute long clip down to about 1.5 minutes. And I think Cathie Wood nails it on the head. And well, after this, you're probably going to be a little bit more bullish on Tesla.
But the two things that are going to happen this year, so this is not 5 years out, mañana, this year, they're going to, in the first half of the year, release their low-cost vehicle. It could be $25,000. No one, except in China, and the Chinese companies are not being allowed in here, but no one in the EV market in the US is going to come close to that. We think that's going to drive demand. The Model Y refresh, I went to go exchange my Model Y, which is on hardware 3, to a new Model Y with hardware 4 for full self-driving perfection. And you know what I love about Tesla? I go to the showroom and he said, "Oh no, you don't buy that now. We're putting out a whole new refresh line." Which, by the way, I knew, and I don't know what I was thinking, but this is what they're telling customers. That's the right thing to do. So first thing is that low-cost car. I think there's a lot of pent-up demand. The second thing is autonomous. They're launching in Austin in June.
The robo-taxi.
Yes, robo-taxi in the vernacular. So yes, they're launching in June in Austin. They just announced yesterday they'd like to start a ride-hail service in California. The regulators are tougher there. So I now think they're going to start seeding every state. And their FSD, according to our calculations, their robo-taxis will be safer in the fourth quarter than human drivers are. Waymo that would be a critical intervention every 700,000 miles. We think they get there. And they're only at 10,000 now. That gives you an idea of how explosive AI is, right? Waymo is at 400,000. So we think they're going to have a cheaper car and a better autonomous robo-taxi experience.
Still sound bullish to me on Tesla.
Yes.
Cathie Wood, CEO of ArcInvest. Always nice to get some time. Good to see you in person for a change.
Hey.
And what I would just, reinforce to you guys is something Warren Buffett said a long time ago. He said, the stock price doesn't really tell you much. It's really the value in the company that matters. Prices go up, they go down. Is the value going up or is it going down? When a company's value is going up, when the products are getting better, when there's no real issues with the company, and the stock's going down, you rarely ever see that. Normally, a stock price is correlated to internal values of a company, right? Normally, when a stock is down this much in such a short amount of time, the company is having severe issues. That is not what is happening here. Now, I think there's other things that are also affecting Tesla. I think there's some recession risk being priced into Tesla. Why I really say that is because we've seen this in 2021, where the highest momentum stocks were killed first. All of the big retail names were killed first before, the Metas got destroyed and the other, large mega cap tech names got destroyed. It was momentum that went first. Well, that's already happened, and Tesla was grouped into that category. So I think that's a little bit of recession risk that has already gotten priced into markets. And it's essentially people saying, if we go into a recession, do I want to hold this stock or hold that stock? People are saying no, which makes sense logically. I mean, Tesla's a car company, right? Trades at a high multiple. If we go into a recession, not a lot of people want to be in a car company. That's like the worst industry you could be in. I mean, historical precedence is pretty much you go bankrupt if you're a car company during recessions. Ford barely survived 2008, 2009. Tesla barely survived. All the other U.S. car companies went bankrupt. Okay, nobody else survived. So I think that's part of this drawdown, which creates a more difficult dynamic because the economy does not move fast. It takes time. And if we're really pricing in some recession risk, I think you could have a longer period to be a buyer in Tesla. Now, could everything go back to normal? Of course. As I explained in the last video, I think a lot of this recession risk is really coming from the administration. The uncertainty around what taxes are going to look like, what tariffs are going to look like, and overall confidence in job securities are way down, which is, causing consumers to pull back. And unfortunately, we're not going to have an easy answer to that quickly, in my personal opinion, which is why I'm not a huge fan of going out and going all in at this level or that level. I think you want to scale in over time. As FOMO Capital here on X points out, he is calling for a local bottom in Tesla, partly because of, obviously, the stock is extremely oversold right now. And history shows that when Tesla is oversold, when the RSI is below 30, it doesn't last long, and you tend to see violent rallies in Tesla, okay? But you're also butting up to a volume shelf, okay? When you put the volume on the side of the chart, you can actually see the biggest volume for Tesla has come in around these 260, 250 levels. That is probably partially why Tesla bounced so much from the lows on Friday. At one point, Tesla was down over 3%. You ended up closing only down a third of 1%. You retraced 90% of the fall that you had on Friday. Now, with all of this volume, that means a lot of people bought around the 260s, obviously sold as well, but bought a lot around the 260s. And this is where people really could start adding to positions. The downside to this is if we were to fall below 260 and maybe even 250, you could get a lot of people that step in and sell here as well. So that is partially why the next 2 weeks are going to be absolutely critical for Tesla. Now, coming in this next upcoming week, you will be getting some important data as well. On Tuesday, Jolt's job openings will be coming out, expecting that to fall from 7.6 million down to 7.5 million. On Wednesday, you will get CPI. Core month over month is the most important. You're expecting 0.3%. If that comes in lower, that's great. If that comes in higher, it's going to start looking more like stagflation. On Thursday, you have PPI month over month. Same is true there. You want to see that come in low, obviously, versus coming in too high. And then you have a new Michigan Consumer Sentiment Survey with a lot of people watching the inflation expectations. Now, they are very political in nature. There's a political bias to this survey, but it was the inflation expectations for the Michigan Consumer Sentiment Survey that started to skyrocket, that caused some of the drama in markets, while also seeing a deterioration in current conditions and consumer expectations. And you're expecting those to get even worse in this next week report. So I think this upcoming week is really critical for markets, generally speaking, and could be very important for Tesla as well. You really want to see a bounce here. If we don't, that's troubling. And let me just be honest with you guys. There is a growing risk of a recession. Again, Tesla started to price that in. It could all change. If Trump drops the tariff, drama, if there's some deals done, confidence will pick up with businesses. They will start hiring again, and they will start investing again. Okay. Consumers should also pick up their confidence as well if, that changes. The issue is, and the difficult part about this is, does the administration want a recession? I could very easily see, the Trump administration pushing us into a shallow, quote unquote, shallow recession. And, doing it right now, you could blame it on Biden, right? You could blame it on the other guys and then, quote unquote, fix the economy. Business as usual, 2026, 2027, 2028. It's like front loading the pain now to get back to a more prosperous, next couple of years. Is that happening in real time? I don't know. Scott Bessent, Treasury Secretary, literally said that we're going to have a recession on Friday. He used the words detox and the economy's rolling over, but in simpler terms, we're going into a recession. That's basically what Scott Bessent said on Friday. If that dynamic plays out, there is more downside for Tesla, but it could all change. And that's why I've been buying Tesla here, even though the stock could go lower over the medium term, the next, many months. So you have the government variable here, but then you also have the inflation variable here and the Fed. If inflation does come down more than expected, the Fed can be easier with policy and cut rates, and that offsets some of the damage that is being done to the economy from the administration. So, that's also a variable you have to look at, and that's why next week is going to be important. Now, we will have more to talk about this in the next video about a potential recession, things that I'm looking at right now, some of the latest developments on that front. but that will be in the next video. We don't have much for news coming out today. I shared the most important things with you that you need to know. But that's going to do it for this video. Nice, short, sweet one, straight to the point for your Saturday afternoon. Hit the like button, subscribe to the channel if you have not done so already. It's free 99. Go ahead and follow me over on X. It's Michael Tyler over there. We share a lot of very important things as well that sometimes never gets talked about in videos like these. So make sure you guys go ahead and do that. It'll definitely help you in your investing journey. If you guys want to come trade with us in real time, every time I make a trade, I do send out alerts. We have a news wire over there and some other cool things happening. Check out that link down below in the description of this video. Have a fantastic weekend, and I will see you in the next one.